Uber has been selected to join the elite group of companies listed on the largest index, the S&P 500. The San Francisco company will be added to the benchmark index before the opening of regular trading on December 18th, replacing Sealed Air Corp in the S&P 500. In a dramatic turn of events, the company's shares have managed to rise this year, up nearly 150%. The last companies that joined the main stock index were EPAM Systems in 2021 and Tesla in 2020. This time, the event is also significant because of Uber's $130 billion market cap, which is nearly 4 times the average S&P 500 company's capitalization of about $31 billion. But is being added to the S&P 500 a good thing for Uber? Let's look into the S&P 500 phenomenon. On Wall Street, the S&P 500 phenomenon has been known for years. In a nutshell, it is the positive impact of joining the index on the price of shares. This is due not only to the greater confidence and prestige of the company itself, but also to institutional interest. Uber have seen a glimpse of this as their shares rose 2% the Monday after the announcement to close at $58.63. That's not far from their all-time high of $63.18 per share set in February 2021. Their stock is up more than 2-fold so far this year. Historically, joining the S&P 500 index has temporarily supported sentiments, but this in itself does not determine a company's stock market success. On this chart, we can see the price change of each company's shares 365 days after their S&P 500 debut. Tesla gained nearly 19% since its debut. EPAM Systems in 2021 debut turned out to be exceptionally weak, moments after the initial rally. The pandemic severely hindered Uber's ride-hailing business as government lockdowns kept most people at home. The work-from-home trend continued to limit the need for anyone to summon a ride on Uber. The company reacted to the pandemic by building up a then-developing food delivery division, Uber Eats, that has now become a major revenue driver. Uber reported a net income of $221 million on $9.29 billion in revenue for its third quarter, and in the past 4 quarters altogether, it generated more than $1 billion in profit. Lower delivery costs have improved margins, and the company is aiming high and comparing itself to major technology companies like Google and Microsoft. Their goal is to dominate the market for transportation and deliveries. A key to its continued growth in the stock market will be a further gradual improvement in margins. The market is most definitely excited to see what the S&P 500 debut for Uber does for the share price and the future performance and growth as a company on the whole. You can invest in the S&P 500 on XStation 5 by searching the US 500 on the platform. Make sure you're following XTB to stay up to date with the latest trading and investing news.